Hey, what's up, everybody? Cowboy here, and it is Thursday, 8:30 a.m. EST. Exciting week. We got Bitcoin just running up, killing it, making a lot of people a lot of money. We've got, oh man, yeah, it's over 90,000. So it looks like poked back up overnight. Let's take a quick look at the charts. Go ahead and share the screen here so you all can see the beauty of Bitcoin murdering it. Look at that. Isn't that great? Let's go ahead and zoom in. You're looking at my gobbledygook algo chart there, so we'll make that a little less confusing. It did take it pulled back a little bit, so let's go ahead and zoom in, and I can show you what happened here. Price was heading up nicely, and I got into a trade. We had a pullback here, right? So I got into this trade back on I think it was Wednesday. Nah, I think it had to be Tuesday. Either way, price headed up, grabbed basically what was a Fibonacci target, a 272, came back down, grabbed liquidity in the middle of this consolidation, and then now is heading back up. So we'll take a quick look at the algos, and we'll go on a higher time frame. Pretty sure it's all going to be bullish. There's just a bit of resistance, right? Because price really has stretched out pretty far. And based on the daily algo here, it does look like price, yep, it still wants to go up. It's really rather bullish, but when it's in the stage, this kind of FOMO type stage, a lot of the indicators and stuff, I don't want to say they're useless, but they're just not quite as useful, right? Because price is, indicators lag. The data that indicators use comes in kind of after the fact. They're very useful, but in the end, price action is going to be a little bit quicker in telling you what's going on with price. And what we basically had was a consolidation, price jumping up and out of that consolidation, coming back down to grab liquidity, and now it's above consolidation. So will it continue up? It's hard to say. 93,000 is basically where a lot of people had their targets, and that was a good target. Price went up eventually to, what is this? 93,300. So 93.3 is where it went. And then, of course, back down to grab liquidity at 888. So that's what happened, right? Beautiful. And I do expect more sideways action to up, right? We could get a pullback. We could get liquidity grabs in this environment if, in fact, the bulls get a little bit tired. And it would be understandable if they did, because if you back out here, you can see that they've been doing nothing but kicking ass ever since about 66,000, 67,000. It's just gone up. I mean, it's been amazing. It's been like a 30 some odd percent move up. So beautiful stuff. Let me take a look at the comments here. Good morning, MTNG. Good to see you. Let's take a look at Solana. Solana is outperforming as usual. Solana is basically, it's like a leveraged version of Bitcoin, right? So it's doing great, making its own sort of sideways action. It moved a bit higher, a little faster, I should say, than Bitcoin. I think Bitcoin was like a 30 some odd percent move, and Solana was like a 40 some odd percent move. And so we got a pullback. And again, same kind of thing. Price shot up, went ahead. The bulls got a little tired. Price came back down, grabbed liquidity right here. Let's grab our arrow and talk about that. Our path here, price came back down, grabbed this liquidity right there, and now is just kind of floating and looking to make some decisions, right? So we'll see how that goes. Might be that we see a little bit of ranging price action while the bulls catch their breath. Might see price head back down, grab a little liquidity, but typically after the so there's the halving, right? And then after the halving, there's this breakout. And typically after the breakout and the all-time high post-halving, price just continues to go straight up. Now, it's a little bit different of a year. So let's take a look at Bitcoin again, and we're going to go jump out. We're going to jump to a higher time frame. And one thing that was unique about this particular bull run, right? Let me delete, well, I don't want to delete all that stuff, but let me delete some of these things. This particular bull run was unique because we have an all-time high prior to the halving, right? And that's never happened. So right about here, you'll see this all-time high. And usually you don't see the all-time high until after the halving. Now, there have only been 3 or 4 halvings. So it's not like there's a whole lot of data. You can't, if we had 200 halvings, I could tell you, okay, this is usually how it goes. But just looking back at the few that we've seen, the all-time high doesn't happen until after the halving. So it might be that the market is a bit stretched out. Again, just to make it really simple, Bitcoin might get stopped at about 100,000. It might be that Bitcoin really can't get too far past that, and that's the end of the bull market. And that might take months. It might go sideways for a long time. I mean, there's a lot of ways that can play out. Or, and I don't want to upset the moon boys here, but you could see Bitcoin easily, go a bit higher than that if the landscape hadn't changed to where you had all these like IBIT shares and all these, institutional money type stuff going to town, buying Bitcoin and all that. I would think that Bitcoin would go up to like 160,000, maybe 140,000 for the peak of the cycle. That's what I would think. But because the large money is in, and again, we've talked about this a number of times, but the large money may have the capability to suck up a lot of the demand and even create their own supply. So that means that basically all the people that would normally buy Bitcoin are now trading these. And even though they're spot and they're, even though that's not supposed to happen, even though these supposed spot ETFs are not supposed to create any kind of artificial supply or suck up demand, they will. There's total normal reason behind that, unfortunately. And so it might suppress price at 100,000. So we got to be ready for that. I saw somebody else on Twitter saying that. They're like, nobody is ready for this. I'm like, anybody that's watching me is ready for this because I've been talking about it for a long time. Not to say it's going to happen, but it very well could. Now let's take a brief look at the SP 500 before we head out to the private live lab. Let's see here. I'm going to back out. Look at a daily time frame, see what's happened in the last day or so. Get rid of some gobbledygook. Okay, so holding up. It's just holding up. So the last day or so, it's just simply held where it is, and it seems to be creating a bit of a range. I'm not comfortable yet calling this a range, but it may end up being one right about here. So say between about 59.85 and what's this? 6,035 or so. Price might bounce back and forth basically in this area, right? And then it may go down or up after that. I can tell you right now, everything is bullish. So the algos on the daily are bullish. The algos on the weekly are bullish. The monthly is probably bullish. I'm not looking at it right now. So, we're just kind of seeing where nothing goes up forever, but when things want to go up bad enough, what they'll do is they'll go up and they'll stop and they'll go sideways while they catch their breath and then go up. And that seems to be what's going to happen, but it's just a little bit early to say that's what's going to happen, but it's looking very much like that'll happen. So those of you in the indices are probably going to be pretty happy with what goes on. I do see a fair amount of market heading up before we run into kind of any type of like economic issues. Not to talk too much about what we talk about in the private live lab, but we do think that that we might see some pain at some point during the administration, just because things have been going up for so long, and this is not natural. This money has just been pumped and pumped and pumped into the indices for a dozen years. There's been not a lot of pullback. So we might see some considerable pain at some point, and that's fine. It's necessary. So we're kind of prepared for that. But I do think that the market's going to run up a bit. They're going to let it run a little bit hot until such time. So go ahead over to algofactory.tech. What we do is we teach people how to trade. We teach you how to create your own trading plan, otherwise known as an algorithm. You don't have to know how to code or anything like that. So we definitely we have people who are building their algorithms, they're trading their algos. It's a beautiful thing. And if you can get to that point where you've built an algorithm, you even have the opportunity to have it coded for you. And when you can have something hard coded for you and it can trade while you're asleep and stuff like that, you're going to have to test it. It's not as simple as turning it on and off, but you're on the path to a certain type of independence. And even if you don't want to do that, you want to trade manually, that actually seems to be the preferred way of most of our traders is to trade manually. So that's also an option for you. Awesome. Well, top right-hand corner of the screen is the QR code. Zap that or go to algofactory.tech. And do not forget,
join us or die.